Hi, so this is Coach Edmund, and I'm here with another episode of my video in my channel. And so if you have been following me, you know that I push out much educational content regarding property, be it whether it's the launches or maybe just in terms of market updates. And today we're going to cover one very important thing that is very close to you and my heart, because this affects anyone. And I'm talking about everyone who owns a property, and this is none other than the interest rates. Right, so we have been seeing a lot of movements, be it from a launch perspective, buyer perspective, as well as developer perspective because of interest rates. And today we're going to go in a little bit deeper to kind of understand what is actually happening in interest rates. So you do not want to actually miss this out, because if you are intending to buy a property, you need to know interest rates. If you currently own already a property, you also need to know interest rates. All right. So the key thing is that today we're going to kind of cover a few things like what is happening with the Fed cuts, where is SORA's numbers going to do. So in this video, we're going to kind of dive in more into the numbers, and I'm going to share with you exact trends, exact numbers of what the interest rates is happening. And also one of the questions that you may be asking yourself is, then should you be refinancing for short-term rates, or should you be looking at long-term arrangements? All right. So this video is really for part one, right? All right. So this is very rare, right? So one group of the followers here in my channel, you could be HDB owners, you could be HDB upgraders, and you may be me sitting on the fence is like, hey, I'm actually on HDB loan. Should I be converting myself into the bank loan since the interest rates has dropped quite a fair bit in terms of that? All right, then of course, if you are my kind of fans, right, who has been following me and you've been looking into the private sector, you could be looking to purchase a private property, or you already own a private property, then this video is really for you to kind of understand what's the difference between interest rates as well as our affordability. Why is there such a big impact on us? All right, so just to give you a quick overview, right? So the one key thing is that the Fed rates, they actually already start cutting their percentage, and that has a direct impact on us. So my direction later on I'll be giving you is to let you also understand that how will these rates turn out for the next couple of years. And let's dive straight into this of the rate cuts. All right, so for Fed, they already cut twice this year, right? And that's why our SORA rates has already fallen down to the lowest in 3 years. And most homeowners, if you ask me, they could be still paying the same every single month, all right? But if let's say today you are kind of paying quite a fair bit and you are unsure what is happening, because I've been getting a lot of clients asking me, hey, now with the interest rate drops, how is it going to impact me? How is it going to affect me? So today we're going to kind of walk through what exactly happens, and I'm going to share with you exact scenarios using numbers, right? Exact purchase prices to give you a scenario to kind of let you see why this adjustment of interest rate, right, is going to benefit you a lot, or could it be impacting you for the long run? And let's just understand what happened recently, which is the Fed cuts in September and October. Okay, so with the Fed cutting this arrangement, let me give you a bigger blueprint of what actually happened in Singapore. So from the September, November, December 2024, right, we already been seeing it growing upwards since until 2026 with the US reserves numbers here. And over time during the 2023 to 2024, there was actually kind of a standstill, if you can see from here. Okay, and constantly they are giving a lot of updates about rate cuts, right? So for the last 1.5 years or so, you can see that the rate cuts keep coming down, and it was kind of muted for a while because there was no movement. Trump was in the office, and then there was a lot of all this tariff situation going on. So there was kind of muted for a while, and then now we start to see it coming down again. All right, so I think from the naysayers, right, in the marketplace, they're all saying that, hey, there could be another rate cut in December. So right now there's all these speculations going on. Nobody can tell until we really get the official numbers, right? But I just want to put yourself into a perspective to let you see what is happening right now, as well as what happened before the rates actually came down, right? So when it was the peak period, we are actually, it was in January 2023, right? So if you can remember, a lot of the fixed 2-year loan rates, right, are all hovering above 4%. Okay, they are all above 4%. And right now, based in October, the rates are already 1.6, 1.75. But later I'm going to share with you what is the actual now rates, okay, as of this video, all right, the most current rates, so that you can see yourself doing some adjustments in terms of your mortgage installments, right? So one thing that I want to kind of highlight to every one of you here is that today, interest rates is not only just affecting us as homeowners, okay? Developers, they themselves are also using interest rates as a benchmark, as an indicator for them to enter the market, to purchase land, or maybe even to finance some of their other property instruments, right? So never underestimate these interest rates adjustments, because you and me, we are all human beings. And when we know that something is more affordable than 1.5 years ago when it was at 4%, and now it's hovering maybe just slightly less than 2%, right? Then you kind of give yourself the confidence that, hey, that means the market, I can accept. I can so-called tar the market, right? I can tahan the market a little bit. So these are all very real human buyer and developer perspective. And this is also one of the reasons why, if you have been seeing for the last 1 year, launches after launches, and when you open out the newspaper, everything is 80%, 90% sold, right? So that is also indication, right, that buyers are confident that today, if I'm able to afford a property, I'm going to purchase it. And because of the interest rates that has been adjusted, it gives me more leeway, more confidence that I can hold on to my property. Does it make sense? All right, so this is a very important aspect. And this is also the reason why that today, with the interest rates still at this lowest point, right? You may want to understand, like, how is this going to affect you if, let's say, today you are buying property, and maybe perhaps for the past 1.5 years or even 2 years, you've been chasing launches after launches, but you're just kind of unlucky, unfortunate that your ballot number is no good, or the unit that you wanted was priced out, you are being priced out, or the unit that you wanted is no more available. Right? So the key thing is that there's a lot more coming out in 2026, and I'll be doing more in-depth video regarding how the climate of 2026 versus 2025 is going to be. So you want to kind of stay tuned to this, and kind of just subscribe to my channel, so that every time when I do a video, you'll be updated, you'll be notified of all this information to keep yourself knowledge, keep your knowledge up to date, so you can make an informed decision for property, right? So what we have done is we actually compiled the entire 2026 launches. When are they going to be launched? What is the estimate prices? And we did a lot of research about this regarding all the different locations, and we kind of kiasu a little bit. We pre-plan a lot on how the entry prices are going to be, and what kind of benchmark prices, when it reaches it, it shouldn't be even considered. Right? So if you are kind of looking into 2026 properties, you have missed out quite a fair bit, or maybe by then you already have perhaps sold your property and you intend to go for upgrade of new launches, you can actually scan the QR code here and reach out to us, because 2026 is going to be a season, right? A new launch season, right? Where a lot of homeowners are going to make a lot of mistakes. Okay, I want to be very transparent about this. That's why I'd rather you be overly prepared than underprepared. So based on our initial study, we are going to disqualify 90% of the launches. Okay, it's definitely going to be, we have to disqualify 90% of the launches out there in 2026. So if today you do not have a framework, you do not have somebody to guide you through, I'm very concerned and worried that you may be falling into the 10%, the 90% of the buyers who will buy the wrong properties. Okay, so if you find that, hey, you've been going for launches, or maybe even in the resale market, but there's no conclusions, you've been chasing and chasing, but nothing comes through, right? Maybe it's a sign for you to kind of slow down. Okay, slow down a little bit to kind of re-strategize what your property journey is going to be. And right now, it's a good time for you to kind of reflect and kind of reach out to get a second opinion, and we can work out something from there. All right. So, so to let you know, right, for one of the key things is that we track interest rates on a very regular basis. Okay, so this is what is happening right now. So in October, it was hovering about 1.5 to 1.6%. And at this moment in November, right, you can see that it has actually, our 1 month SORA is about 1.24, and our 3 month SORA, November, 1.34, as well as 6 month SORA is about 1.6%. All right, so these are all indication, and you can see that the numbers are basically coming down. Okay, coming down. And in case some of you are kind of new into property, I also want to kind of give you guys a little bit of history lesson. Okay, just give you to understand, because a lot of times we only know interest rate law, but for as a homeowner, I always believe in understanding as well. You don't want to just blindly buy a property and you don't even know what kind of payment are you doing, what's the interest that you're paying every month, how much percentage goes into a principal, how much goes into interest. I think these are all important for homeowners to know, so that at the end of the day, you are able to make a better informed decision yourself and not just rely on other third party and then whatever they tell you, you just believe. All right, so in case you do not know what is SORA, okay, SORA, it means Singapore Overnight Rate Mortgage, right? So to give you back a little bit history, right? So it was not used to call SORA, okay? It was used to call SIBOR. And if you are older generation, you may even know the previous indication, right? So actually for SORA, it was discontinued in the end of 2024, all right? And one of the reasons why they do this, right, is just to give you a quick overview. So SORA rates, right, is based on volume weighted average of borrowing transactions in Singapore. Okay, so the indicators is always based on transactions in Singapore. SIBOR, all right, on the other hand, the last time one was based on interest rate banks charging other banks for borrowing. So that's why there's a lot of all these fundamentals that Singapore government are always looking to kind of create our own safe haven, if you ask me. I think that's one of the reasons why they actually changed from SIBOR to actually SORA, so that the rates are going to be more transparent. Okay, the process is going to be more transparent, and even though the volatility of SIBOR and SORA are kind of similar, okay, but SORA actually allow us to compare bank loans more efficiently. I think this is extremely important for us as homeowner. And in Singapore, because we are not very big, so in order to kind of uphold the integrity of the financial markets, right, and to benefit the consumers and the different institutions out there, that's why SORA was being considered. And for the last period where, I mean, nowadays, if you are still have not refinanced your property, most of the time you will already be on SORA. Okay, and SORA is considered more stable. Okay, because it's based on bank transactions and it's not based on like any guru or expert buyer's judgment this process. So I think Singapore has a very long foresight when the MAS they came out all these things to kind of if you ask me, it's a little bit more in control, but the control is to help us. Okay, so to give you some ideas, right? Because why am I sharing this in terms of HDB as well? Perhaps you're a HDB owner, right? And I want to kind of highlight to you, a lot of homeowners in HDBs, what I realize is they just take on a HDB loan and then they just don't bother about it. They just continue paying it month after month. And they don't even look at how much the interest rate is everything is going on. And this has happened before, that the interest rate actually fall so much lower than HDB loan. This one, if I'm not mistaken, it was at least about 12 to 15 years ago, at least, during that period, where it was a no-brainer to actually switch to a bank loan. But let us see some scenarios from here. So I'm going to pull out some numbers later so that you all can actually see better. So for HDB loan, right, you can see that now for the SORA rates, right, this has actually came down. And right now, the numbers that you are seeing is hovering between 1.5 to 1.6 to 1.7%. Right, so this is based on floating rate. Okay, but of course for bank rates there's always two types. One is the floating, one is the fixed. And because for SORA also, so after the second year, after the third year, depending on the package that you're going for, there will be some adjustment depending on your SORA rates. But if you're somebody who also just want to take on like a HDB loan, right, that is fixed all the way, right, then maybe you also want to consider what? You want to consider like a HDB fixed rate, which is based on this. All right, so this is how they fix it, maybe for 1 year, 2 year, or even 3 years, depending on the package. And this does not mean that you get to continue paying this rate forever for your 25-year HDB loan. If let's say your loan tenure is 25 years, right? So the bank works a little different. Unlike HDB loan, 25 years don't change, right? But for bank rates, usually after 2 to 3 years, that's why you need to kind of reprice or refinance your current situation. And this is something that I believe a lot of homeowners did not consider, did not take this into part of your property journey. A lot of them, after they buy, they don't bother about so much. When the bank send the letter, then they kind of review it. Oh, this is how much I'm paying. Then you kind of do some adjustment. I think by the time when you want to do that, it could be a little too late. All right, so that's what we do always is every 2 to 3 years, or we will always go back to our clients to kind of like, okay, now what is happening in your property? This is your current situation. Your loans is this way. Now the banks are offering this, what are our plans, our future plans? Then we can kind of work it out in order for you to actually capitalize the best out of your property in terms of squeezing out whatever you can. Okay, yeah, so for fixed rates for HDBs are always fixed this way. So there are certain, later on I'll also share with you like the comparison between HDB loans versus the bank loans, right? What are the main differences? So that at least you can kind of weigh yourself out and see which is a better direction for you. But of course, if you just look at the numbers, 2.6% versus 1%, of course, it's a no-brainer. Later on, we will be running through the numbers exactly to see what kind of savings that you're actually getting. All right, real numbers. All right, so for my private property owners, just to give you a quick update on where SORA floating rates are going on right now. So everything is hovering about 1.5 to 1.6%, which is a far cry from just barely about 1.5 years ago, where everything was 4%. And that's why during that period, there was a little bit of panic that the market was a little muted because of interest rate that went up about 4%. So just to give you all a teaser, right, 4% is not the highest, all right. I think over the period in Singapore, it has went up to 6 to 7% before, all right. But of course, those are like 20, 30 years ago. But it has went up that kind of period before. And I was just speaking to a client, averagely what they are paying is always 5%. It's just that we have enjoyed less than 1% before. We have enjoyed 1% before. So the moment when it climbed all the way to 4%, and that's your first time owning a property, you suddenly get worried. Okay, but just always understand property is never a short-term arrangement. It's always a long-term. So there will always be up and down. So just don't panic over it. I believe one of the better way for you to redo it is to review it every other year so that you know exactly how you can position yourself in the marketplace. All right. So for fixed rate, is even more attractive at this current moment. All right. So sometimes you need to know what kind of strategies the banks are coming out. It's not about, because they are giving me lower, so I should just fix myself out. All right. So there's a lot of all this conversation that we have with our clients whenever we even guide them on how to manage their interest rate situation. So one thing is you don't need to worry about the numbers, okay, because we're going to kind of share with you later on. At the same time, we also cannot control how the Fed reduces their rates and everything. But what we can do here is we can kind of determine how and control how we respond to the new guideline in terms of interest rates. All right, so that will also give us a better position when we are entering the market or even exiting from the market. Okay, so now let's take a look at the main differences. All right, so for bank loan for HDB loan, it has always been capped 0.1% above CPF OA, right? So that's why it has always been fixed 2.6% regardless. Okay, regardless, there's no difference, no changes, it's just fixed. So for those who want a peace of mind, don't mind paying a little bit more over the next 25 years, then the HDB loan can help you. For private right now, if you can see, we're talking about 1.5 to 1.6%. All right. So again, as I mentioned, this is only for like maybe 2 to 3 years, and every 2 to 3 years, you kind of have to review and then see what is the current market situation going on. And then you kind of adjust it accordingly. Later on, I'll share with you what kind of profile of client or buyer or owner you are that you should choose between HDB or your bank loan. I'll give you my opinion. And for HDB loan right now is at 80% in terms of your loan value. For bank is 75%. So that's why sometimes when we are seeing in the past, what we realized was that in the past, a lot more homeowners go for HDB. Why? Because the down payment is lesser and you are able to borrow more. Okay, so that was in the past when you can borrow 90%, right? But recent years, there are adjustments and it went up to 85, and then now it's at 80%. So it's somehow very similar to condo at 75% rate. And this is also one of the reasons why I also believe that from the younger generations, they start seeing that, hey, the privileges of HDB is kind of comparable to private already. So why would I not go into private property instead? So this is, so I believe, one of the reasons why we are seeing a higher numbers of buyers going into the private sector. Okay, but this is just my opinion and what I kind of sense from the ground. Again, for HDB, there are some advantages, and sometimes we just want to take some of all these advantages that government give us, right? Like when you want to do repayment, there's no penalty. Okay, and for banks, depending on what's your terms and conditions, which is very important, you must always read your terms and conditions. If you want to do repayment, is there incurred of additional fees? And usually they have, depending on the period. So there are more restrictions. So that means even if you win total $1 million, you want to pay down your private property, there's a penalty. But the way that I see, you make 1 million from total already, what's the penalty? Pay. Okay, it doesn't matter, right? But like I said, if we can save, we save. And so HDB, again, because it's for public housing, it's for everybody. If you are late on the payment, they're not so sticky about it. Okay, then they are practically not so sticky. For banks, they will come and hunt on you because private sector they can't kind of do charity. So it's a different segment altogether. And of course, for HDB loan, your income and citizenship has to come in place before you can take a HDB loan. For private, it's quite straightforward. All right. So if you ask me, right, sometimes I see like the HDB loan is a little bit in this context now, it's like Volvo. Okay, very safe. Wow, but kind of boring now. You just the same rates or everything, and there's no changes at all. But for bank loan, right, it's kind of you need to be able to take on the racing car a little bit. Like, okay, there may be some adjustments, like I can go faster, I can go slower, kind of things. So if you intend to look into the bank loans, right, you need to also kind of mentally prepare that there will be also chances where interest rates can go even beyond the 2.6%. So again, there's no right or wrong answers for this, but I would like you all to kind of use this as an indicator. So how do you choose between these two? I think one of the key indicator is you have to ask yourself is, how long are you intending to hold this property for? Okay, how long are you intending to hold this property for? Because if you are thinking about holding on to this property for 10 to 15 years, what are the chances of interest rates adjusting upwards or maybe even downwards? All right, so nobody can predict what's happening in the future, right? But if let's say your 10-year horizon or 15-year horizon, which means the chances of the fluctuations of interest rates up and down will occur more frequently. Does that make sense? All right, but if let's say you're looking at a very short term, 5 years after MOP, you will want to move forward, upgrade, buy a bigger unit, right? Then your shorter timeline for you to kind of gamble, or in the wrong word, to kind of gamble a little bit that today these interest rates, even if you have enjoyed the 3 years of very good 1.5% example, and your last 2 years it went up to 2 to even 3%. When you average it out, I think it's still savings. So this is how I believe that if you want to look at it, sometimes you have to run through the numbers and understand it better before you kind of just jump into it and not knowing what is happening. So I want to give you a very quick overview, right? Like based on the numbers, how do they pan out? Okay, so let us use an example of $1 million. Okay, let's just use a very simple number because I cannot use like 500, 600,000 because why? Private don't have I mean, yeah, you practically can't find a private property that is like 500, 400,000 anymore. So, but $1 million HDB have. So we use $1 million just as a benchmark. So if you look at this, right, this is based on HDB loan. Okay, just to give you a breakdown. So for HDB loan, right, you can see that based on 1 million, all right, the interest rate is at 2.6% fixed. So the difference is HDB, the maximum tenure is only 25 years. You must take note. All right. So it's different from private property. Private property can go up to even 30 years. And there are ways that we can even stretch it even beyond 40 years. Okay. So there are different structures that we can do. And the loan to value is at 80% instead of the usual private property is 75. So your loan amount becomes 800,000. So based on $1 million, to buy this $1 million HDB, you need to borrow 800,000 and your monthly mortgage will comes to $3,630. Okay, this is not counting your CPF payment and everything, and that means this is a net monthly mortgage. And on the other side, because this is fixed, right, your interest amount will also just fix. So this is kind of the numbers that you can use it to reflect. So the question is, if I'm basing on $1 million purchase on a private property, that means I go and buy a private property for $1 million. What is the numbers that turn out? Okay, so everything is the same. That means the figure is the same. Just some of the limit, the what we call it, structures of private property and HDB changes. So next you can see, right? So this is private property numbers. Still $1 million, but because the interest rate right now for private property bank loan is at 1.5%. Okay. And you are able to kind of stretch your tenure for 5 extra years. So these are all perks that you can also kind of tap on it to take advantage. It's a 30 years, so you kind of plus 5 years. All right, so the longer tenure that you have, what does it mean? It means that your monthly mortgage also what reduces. And because I will borrow more, but on the other flip side, because I can only borrow 75%, which means I also plus another 5% of down payment. All right, so it's a plus and minus to balance things out. But at the end of the day, overall, right, instead of 800,000 that what HDB does, right, you're actually borrowing lesser. And when we are borrowing lesser, right, it means what? It means that I'm also paying lesser in terms of my mortgage. So how many of you, does this make sense? All right. So this is why sometimes when you are looking at the surface, like, wow, 2.6 versus 1.5%, maybe it makes sense. But if you never dive into the numbers, maybe a lot of homeowners out there, maybe you yourself will keep thinking, for me, when I buy a HDB, I'm actually paying lesser than a private property. But this is not the case. For the same amount, actually, you're paying if you buy a private property, actually. All right. So again, all this we still have to run through the numbers to make sure that everything is in order. But this is just for discussion's sake, right? So again, I was sharing like the only reason that you need to kind of take this into consideration is the duration of holding period that you want. Okay, whether you can manage if the interest rate jump up to 4%. So these are all indicators. So you shouldn't just jump into bank rates or because it's low. Maybe you're somebody whose job is kind of a little bit unstable, like, odd jobs, or, it's not consistent. Then you may not want to give yourself so much pressure on going into something that it kind of fluctuates as well. So I know some owners, they just want to have a peace of mind. They would say that, oh, this is the amount that I need to pay every single month. I just make sure that I have this amount every single month in my bank and I won't bother. Instead of one day you wake up and suddenly your interest rates double and then you have to pay, not double, I mean a little bit like double the amount of mortgage. Right? So these are all something that you need to kind of take note of. And so, yeah, so if you're looking at a short term, like 5 to 6 years, I think a bank loan right now will benefit you tremendously. But if you are looking at longer period that you have no plans to move to anything, perhaps a HDB 2.6% to fix it, it could help you. All right. But again, nobody knows, right? Maybe 5, 7, 8 years later, you say you want to move. All right. Because everybody's plan will change somehow. Okay. So this is something that is very important for you to know. All right. So now let's say we base on the affordability. Okay, so if let's say we go back to HDB, right? So the affordability, if you're able to buy a HDB at this amount, meaning you're able to afford $3,630 every single month. So let's use this as a benchmark. That means I can afford this. Are you aware that if today you can pay $3,600 as on a money mortgage, let's reverse engineer the process. You want to understand how much you can actually purchase for private property. Okay, let's take a look. So if you are able to pay you're able to pay $3,600 per month, right? Same $360, you can buy a private property that is worth 1.4 million already. Wow, suddenly your figure jump up. So you no longer need to pay for $1 million HDB. By just a switch, by understanding numbers better, right? And because you're so comfortable paying this 3,600 anyway, you potentially have a chance to actually own a $1.4 million property, which increases your net asset from 1 million to 1.4 million, which is a private. Okay, why am I sharing with you this? Because one of the thing that I always share and train my clients with, right, and teach them about property is that you want to grow your, let me just write this down, you want to grow your net asset value upwards. Okay, you want to keep growing up. So if you are on a 500,000 HDB, you want to grow it and upgrade yourself to maybe a bigger unit, 4 or 5 bedroom that is 800,000. And from 800,000, you want to climb maybe to a private property at 1.2 million, 1.5 million. And you continue climb this property ladder that we guide our clients in. So why do I want to do this? Because today, if both HDB, oops, you're not seeing the chart. You're not seeing the chart, right? Right. So imagine, right, if HDB at 1 million, okay, over a period, and the private is over a period, let's say over a period of 10 years. Over a period of 10 years. Okay, you use 5 years, use 5 years. Let's say 5 years, right? The property went up only just 15%. Only 15%. Which value will increase faster for you? All right, so this is important for you to understand. One of the key things is that today we must understand. Okay, we must understand. A second, let me just do this. Yeah, so if let's say today, based on the same 5 years timeline and both property 1 and 2, they all grow 15% over the same 5 period. At the end of the 5 years, which one will grow faster? So we're talking about at the end of 5 years, right? Let's just use a different color, right? The $1 million property will become 1.15 million. What else? The 1.4 million property will become 1.61 million. So this is why I want to share with you this, because by you understanding how you are managing the money, the monthly mortgage, or even trying to optimize your ability in terms of borrowing, you can actually grow your asset from 1 million, even though you are thinking of buying a HDB, and you can easily move to a private property at 1.4 million to help you grow your net asset faster. And this will always be very beneficial for those who are younger, you are working, and you have a lot of leverage. Okay, we're not saying that if you're older, you cannot. But then we will need to use a different benchmark for the older generations and the older age, right? But if you are in your early stage, as a young couple, right, this one move could save you many years. All right, instead of you climbing up the property ladder from a HDB, then you climb to a private property, you potentially have a chance to grow faster. And this is what we teach a lot of our clients and their kids, right, on how to actually look into property this way. All right, so this is very important for you all to kind of understand how it goes, right? All right, so the key thing is that let's say today we look at, let's say if today you own a private property, how will this interest rate change actually affect you? So let's say today you are already owning a 2.5 million property. Okay, let's just take a look at scenario. So based on 2.5%, we're talking about January when the interest rate was very, very high at 4.5%. Okay, I'm taking on the consideration that it's a 30-year loan and it's for the 75% full loan per se. So your loan amount comes to about 1.875 million, which means that based on this, you are paying almost $9,500 every single month for a $2.5 million property. Now, the Fed cuts. The market is at your favor. And now we just use a 1.5% as an indication. Can you see the numbers drop from 9,500 to 6,400? Okay, let's just use $6,500. Okay, 9,500 to 6,500. We're talking about $3,000 saving. Right? We're talking about $3,000. $3,000, wow. Hey, can do quite a fair bit of things, right? This is what I call savings. Okay, savings. So today, if you missed out or you don't have anyone to kind of monitor this aspect of savings for you, right? Then you may want to really get somebody to help you out and update you regularly on how to actually better position your numbers and your finances better. All right, so I think these are all basic property financial literacy that any homeowners, you and me, we should know this to give ourselves an opportunity to save money instead of spending everything out to the bank, right? If you ask me, the last thing I want is I don't want to pay the bank for nothing. But by this switch at 4.5%, if you are in the dark and you do not know what's happening, can you imagine every single month you're paying extra $3,000 for nothing? All right. And with this interest rate right now at 6,500, what can you do with this extra $3,000? All right. You can go for more Haidilao. You can go for a trip, a short trip by this savings every single month. You see. So this is why it's very important for you to be very prudent. And I believe that with this kind of adjustments, next year in 2026, there's going to be multiple launches coming up. And I want to urge every one of you also to be extra careful not to fall into the traps where 90% of the launches are not suitable for you. Especially right now, you may see that, oh, because the interest rate is low, I should just get into this without knowing too much. I think that will be a very huge mistake. So if you find that you've been chasing properties, chasing launches for the last 1 to 2 years and you have come to nothing, you may want to seek a second opinion from us and let us maybe guide you through what are the maybe pitfalls that you can avoid, and maybe there are some certain gaps of knowledge and understanding that we can help you along with it. All right, so I hope that today this interest rates video can give you a more insights of there is actually more than meets the eye about property, not just about how much I have and how much I can buy. I think if you can plan it properly, you can actually make property a very, very fun journey with you and with me. All right, so with that, I really thank every one of you for watching this video. And if you have not subscribed to this video and this channel, this is your best time to do it. Give us a like so that we can continue to put out more videos like this to educate you and give you more knowledge to make better decisions. All right, yes.